Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, June 9th, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We have seen a pullback from the previous session's highs here, and after the previous session, we had a pretty narrow range that had finally developed here. We can quantify that down here with our advanced ADR indicator, bringing this down to just 1. It wasn't significantly compressed, but again, it did fall under 70% of ADR, so very, very narrow overall. And when that tends to happen, you tend to see a test at both edges of the range. And what that means is we could further drop here this morning and take out the previous session's low. In that case, we'd be looking for some sort of trap and perhaps a rally into the end of the day. So it would look very similar to this day over here. Narrow range, price drops early, rejection, rally into the close. It could look like this over here. Breakdown, rejection, rally into the close. So we'll continue to watch here for signs of strength overall because this market remains extremely bullish. The price structure remains very bullish. The PIMA trigger zone remains uptrending and bullish. Even if this were to pull back, say to 3100, it still could be a buying opportunity for continuation higher until market structure breaks down. So right now, watching for more weakness in the near term here until we take out the previous session's low, and then looking for a potential bear trap below 3180 for a reversal back higher heading into the end of the day. Now keep in mind, we may just see a trading range develop up here as we do have the FOMC statement and the Fed interest rate decision later on Wednesday. So it is FOMC day on Wednesday, and we could build a range ahead of that into that event. So we will likely see some nice movement here following that event. But for right now, again, the market structure remains higher. All pullbacks still a buying opportunity until proven otherwise. If we take a look at the NQ, you'll notice very similar price action here. This one also had a narrow range in the previous session. Again, not significantly compressed, but still below 5 and 10 period ADRs. And again, with any kind of weakness here early on, you're looking for a buy the dip opportunity into the close. We talked about that yesterday as well, and had a great follow through here as well. You also see that this market just hasn't seen many down days in general here. I believe there's only been 1 or 2 in the last 3 weeks. You got this one here, you got this one there, this one, and this is a few weeks here. So again, this market, even if it were to pull back a bit lower than 9,800, it could still be a trap and buy for a continuation higher until proven otherwise. We are now less than 100 handles from a round 10,000 number here in the NQ, and this market's been averaging 201 points per day on a 10-day basis, and right now we are 95 points of range. So we could easily hit that 10K number today if it wanted to, based on average range over the last 2 weeks. Okay, let's take a look here at the crude oil chart. Here it is. We're down about 1.5% right now, heading into RTH for crude oil. This one remains very, very bullish. We did hit 40 bucks in the previous session and dropped away from that level, hitting lows just above the 37 level here today, 37.07s. You can see that this PIMA trigger zone has been very, very strong. Every time price gets at the 8 period or below it, it's been bid higher. And so right now we're coming into that zone very soon. Again, this price right here is at 36.84, and today's low right here just at 37.07. So we could drop a bit lower into that zone there, but that could be a good trap opportunity for a swing continuation higher. We have the 200 period average right above, and that could be a zone that could be hit here. If there's a failure to hold 35s, that would suggest a much bigger pullback, but again, this has been about as strong as you would see out of crude oil, and overall the market structure remains intact until proven otherwise. All right, let's take a look lastly at gold futures. With gold, you'll see that gold is bouncing off that 1680 level. We've been talking about the trading range that's developed at highs. It's developed at a key range high, which is right up here, and that key range high, very, very important as the market continues to kind of build acceptance at this zone. At some point, we're going to see that energy released to the upside, or these late bulls, if they don't get paid, eventually the sell stops come out and triggers a reversal back toward the 200 period and the midpoint of this key range, but also likely all the way across the range given how much energy is in there. So right now we are building that energy. A move is coming of perhaps at least 250 points, 255 points once a breakout occurs, because that is the size of the range. We're either dropping back all the way to the 1450 zone, or we're going to start making a move higher to the upside targets. 1831 and 1957 would be those major upside targets. So if we were to break to the upside, you got 1831, 1957 as the upside. Otherwise, 1575 and 1450. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you soon. Take care.